So from a weekly perspective, we are at an interesting position so far. On the monthly, we haven't been able to break down and close below 1937, which seems to be a monthly level of support. Price has taken support into that range and pushed back up. Next area of support on the monthly comes up at 1928, 1927 area. So we'll take a view from a weekly perspective as to where that stands. Previous monthly high is at 1965, creating new lows at 1885, meaning price is trying to break further down. But at the same time, there's two sets of things. We have still continued to consolidate. We couldn't see a closure below, so there is no clear indication that we are going long-term sells at the moment. The best we can expect is at least for market to drive down to 1919 through this month before it even tries to take off towards the top side. Alternatively, we might see market move up first, get rejection within this range, and then come back down. So let's see what the market holds. Weekly, let's draw the trend line on the monthly first. So this is the monthly trend line. Now this rejection here makes sense, right? Market tapping down into the monthly trend line, building momentum and trying to push further up. I kept saying that we don't have a top wick, which means this candle can reverse, and we started to reverse. Now the monthly does hold significant impact over the long-term view of where the market is trying to head towards. But if you look at the current position, the monthly has not been able to close below 1937, which is for the current month a good thing and a bad thing. If you're not able to go break further down on the lower time frames and close below, we might not be able to continue further down. What could be the range that we can expect the current monthly to drop down all the way to? We can see that the maximum range at the moment seems to be 1900. If we break the trend line, we continue down. Otherwise, there is nothing that's going to stop us from pushing further up. So looking at the weekly, let's adjust this to match. And that is the weekly trend line. The weekly continued to push up, getting a rejection at the top. So let's take that trend line, put that in. So if we consider this trend line, market still has a range to push further up towards 1961. Let's look at this one here. And there it is, right? So there's two sets of trend lines coming in from the top, which at the moment indicate that market has already seen rejection 1, 2, and 3. Within that range, we have 3 touch points confirming the trend line. The current weekly can still go up and take a tap. I'm currently expecting 1945 as being the top range of the weekly before it. So the moment it breaks above 1945, we are trying to go further up to 1960, 1965 range. Yes, we do have a expectation of market, or a lot of people are expecting market to tap into 1955, which is a good rejection area across the zones. But if you look at it from a trend line perspective, that range means break of this trend line here and a range that goes up for rejection to 1960, not necessarily at 1955. At the same time, the area that we've rejected in is also a rejection range. We see that there is a lot of support sitting here, a lot of rejection sitting here. Market has created support here and previously has seen rejection from the bottom and from the top. And we've seen that rejection once again. So the spot that we have rejected in is also not a bad level. Now, does that mean that we're going to go further down, or are we going to go further up? We'll take a look at that based on what we have coming up fundamentally. Monday, we have Labor Day across US and Canada. So don't expect New York to give you anything. I believe New York might be shut down. So London session close is going to be the end of the session for today. So let's look at what kind of a range it can give. Considering the current weekly, I am expecting, and if you look at it closely, 1946 is the range, also taps into the trend line, so is a perfect rejection range based on historical area of rejection, which is a perfect rejection range. Look at this, top wick right here, doji sitting right there, bottom wick sitting right there, previous rejection, and a trend line. So we have multiple forms of confirmation that this is a strong rejection area. Any break and closure above on the daily would mean that market is trying to push further up to 1960. We could still see a rejection coming in at the previous week highs. However, we know that there is now a gap on the weekly. Market does have a higher chance and has the space this week to make that retracement. And if we are going further down, and like if we come back down, we have support sitting right here. So this is what we can definitely make, right? This is something that can definitely happen. There is a scope for this long term at the moment. Based on the monthly, this is what we might end up seeing this month. But as of this week, 1945 seems to be a good range of rejection, and a good area of support seems to be sitting in at 1921 range, with the weekly level, with the monthly level sitting up into 1900s. So let's mark that up. What do we have on the, so 1900s, we have rejections and reversal. Market reversed within this range previously, right? 1890s to 1900 seems to be a good area of rejection, even historically. So let's go into monthly and put that line in. As we can see, historical area of support. And 1890. Right, so let's put that in as well. And there we have a range of rejection closer to the trend line, which 1890 seems to be the endpoint for the monthly. Looking at the weekly, the range is further up, right? 1897, 1900s. The further ahead we go, the range reduces. So, okay, we have a good expectation from the markets based on that. Now, if we look at the daily, what do we see? We see a structure, step, structure, step. So why is this not possible, right? This is also possible because the previous daily closed a doji. It closed where it started its day. Even though the previous daily gave us a sell signal, the sellers could not take control, which means this is the trend line that we are trying to push towards at the moment, which could be the area of rejection before market makes a drop down. Temporarily, however, we can expect today's day to range between 1930. As we can see, left-hand side, a area of support sitting right there. So let us mark that off. So we have a daily area of support sitting at 1933, 1934 area, which market did previous daily take support. So start of the week, we would expect a bit of a retracement. Now, why do we expect a retracement? Because market closed the week with a bunch of gaps sitting up at the top when it made that spike during NFP. So those up until 1945 is the level, at least on my charts. 1945 is how far I see that gap coming up, and that is where we are seeing that rejection level for the week as well. So 1945, we take a dip down is going to be our expectation. What does that mean for the weekly? So weekly, let's see, we only have one set of news, I believe, or two sets of news. We have PPI coming in on 14th. No, this is not. So this week we only have PMI. And I believe jobless claims. The jobless claims might neutralize a bit because we saw them increase a bit last week. We had a lot of employment-based news. Unemployment kind of started to go up. So just considering that, retracement possibilities look very high for this week. Let's look at the previous numbers. So previous numbers. Monday we don't have anything. Tuesday we don't have anything. We do have balance of trade and PMI on Wednesday, which could be a significant impact news. So global services PMI have been negative. Back-to-back 3 newses. Services PMI has been negative for the past news. Balance of trade has actually gotten worse, or actually gotten, yeah, it's actually gotten better. No, it's actually gotten worse. Sorry, if you're looking at a deficit. So it's from 69, negative 69 to negative 65. This time around, they're expecting it to be 68, so they're expecting it to get kind of better. So we'll see about that. Other than that, we have jobless claims coming in on Thursday. It could still see a decent amount of impact. We have non-farm productivity, with non-farm payroll giving the type of spike that it did, even though it ended up being positive for the dollar. This is something that can contribute to another push. So even though it's a medium impact news, you should be very careful about it. And then Friday, we can expect a retracement Friday to come in. So overall, this week looks to be something of this sort here, like a doji kind of a week is possible. You might see buyers and sellers trying to go to war. So be careful in the trade, but it should be a very profitable week overall, because you have a narrow range, you have good areas of support and good areas of resistance, you have trend lines giving you further indication. You have moving average line on the weekly where market has starting to take rejection. On the daily, we can see that daily does have a little bit of a range to push up, but it should be able to take a drop to the 50% line, which would kind of come up into this range, 1920 area, which is the weekly range we are expecting market to drop into, take support, and then try to go bullish again, which is usually what we would see. So RSI, trend lines, supports, resistances, everything is giving us an indication of a correction and then a pullback. So based on those confirmations, now it becomes easy to trade the week on. Let's take a quick look at DXY. What's happening on DXY? So DXY made a push and then closed within previous areas of rejection. Now, there is a lot of rejection sitting in that range. Market is trying to push towards this area. If we see that push, we can definitely expect market to jump up here. But if we now look at the daily and the RSI, market has tapped into the moving average line after break. So now it's a retest. We have a gap setting here. We can expect the daily to start taking a drop first. So if the daily tries to continue further up, it's going to see a rejection coming in. So we can expect a doji kind of a close for DXY since dollar market is going to be closed. And we will see a drop down. Let's look at the situation on the weekly. Now, if you look at the weekly has the scope of pushing up. But at the same time, you look at the previous weekly, it's left that massive bottom wick. The entire weekly candle flipping. What does this mean for DXY? This means that DXY has a scope of dropping down. If the momentum comes in and the momentum stays there and maintains a little bit of momentum and manages to close a weak bullish here and breaks above 104.439, this level here, we should be able to continue further up. What does it mean for the monthly? So based on the Elliott wave, we were expecting that the monthly is going to drop down. We did expect the monthly rejection. We saw the monthly rejection close back in that range. The next monthly taking support and pushing up, which means that we can definitely go up. But at the same time, on our side, the monthly is approaching the broken retest of the moving average line, which means DXY is setting up for a further drop. As we know that DXY has to make a correction all the way into this range where it made a solid push up, it has to stabilize. It has to stabilize within this range and then go towards its eventual move up. If we break through the level of 105.734 in the long run, then we can expect DXY to try and make a further push up. Till then, we can expect a further correction down, at least into this range here, before market tries to jump back up. So the next few weeks, especially the end of this year, might end up being not as good as we would be expecting. What about this week? This week has given us a doji. If the current weekly closes bearish, we are getting a 3 candlestick pattern on the weekly indicating sells, which means this is what we will see all the way down here, probably breaking the lows, which means gold can go superiorly bullish. So will this doji become support, or will it give us a further sell signal? This is going to be an interesting point to see. However, what does that mean for gold? So I don't like to associate DXY directly with gold, primarily because gold is heavily sentimental based. DXY is very fundamental and technical in its movement. So a lot of times you will see that DXY and gold is moving in the same direction. That is because sentiment-wise, people are not worried. They're expecting, yes, markets have drops and rises, right? The sentiments on gold can change based on it. So even though DXY goes bullish, gold might continue to go bullish. If DXY goes bearish, gold might still go bearish, right? You might still see that movement. Those corrections can still come in. So it's going to be a point of looking at it from a fundamental perspective. This month, we have inflation and interest rate decisions coming in, which is going to be a major factor of what's going to happen in the coming few weeks, coming few months. Right now, we know that inflation is not where it is supposed to be. It is not dropping at the pace that it was expected to be. Unemployment rate has started to drop. So even though a lot of people are saying, where's the inflation? Where's the new recession? It's not coming anymore. It's just fake. Well, it's not. The impact of interest rate decisions, we've already started to see that. The slowdown in economy is starting to seep in. It's a delayed, it's a lag result. So the lagged result will have its own impact. Mortgage rates have gone up, foreclosures, etc. All of this has to come out yet. And when that starts happening, with unemployment rate going up, that is your real tell that recession is something that can be definitely real. Now, even if you don't term it as recession, which we don't necessarily have to, if the markets don't struggle as much, markets are still able to hold on to their profits and still survive. Companies are not going bankrupt. In that situation, we can still expect an economic slowdown. That economic slowdown can last for weeks, for months, for years, right? It depends on how weaker the economy gets and how does the employment see stabilization. Right now, we are still in the dropping phase. We're not seeing, basically, there's still downsizing happening in a lot of businesses. We will initially start seeing that stabilization, hiring starting to come back on, slowly, steadily getting back on pace, and then eventually reaching initial levels. That is a long way to go. That will take a long time. And so you have to be very patient and wait for market to do its thing. Okay, so we have a good amount of data telling us we do have worse parts coming in the coming few weeks, in the coming few months. So you got to be ready for that. So from that perspective, where do we see a good opportunity in gold? So if you look at weekly, we are expecting the monthly trend line to hold because monthly is powerful than the weekly, unless news tells us that gold is getting weaker. The weekly closes doji, next one tries to make a retracement, or the current one makes a retracement, the next one tries to go bullish. That is what we would be expecting, right? So monthly has a good scope of going bearish, but before it goes bearish, it has to push up. If before it completely starts to melt, it has to go up. It has to re-challenge that 2000 level. We haven't done that yet. We failed the test at 1987. We haven't touched back into 2000. Why do we say that? So look at this. Market started to drop. The next one challenged it once again. We closed in this position. The next one pushed further up and then dropped down. And when we try to challenge this push, we failed. We need to be able to challenge that push. So the challenge of the push closer to 2000s once again. Do we see that challenge coming in anytime soon? That is going to be the big question. Investors still at the moment expect market to go further up and break through this trend line. So if you don't know, there is a trend line sitting right here. If this trend line is broken, we will go further up. First target would be 2100. That is something that is still in the expectations. So you can't ignore the fact that there is economic situations that are not supporting the favor for the dollar. Asian markets are trying to stop trading in the dollar. That is another bad. So there's less volume coming into the US dollar, basically from that. Less people are purchasing US dollar. Economies at scale, if they're doing that, that has a huge impact on the global economic value of the dollar. So you need to factor those parts in. What's happening globally? We're seeing a lot of things change and a lot of discussions happening. So you gotta wait it out, right? We are focusing on all the smaller factors. If you're trying to trade long term, if you're trying to understand and secure your account, people have small accounts, $500, $100, $1,000, $2,000, $10,000. If you're trying to keep growing that account, you need to know what are the scope of the market pushing towards. When we have a monthly consolidation, this can be an acting. So monthly trend line rejection, momentum expected bullish. So monthly is giving you a bullish momentum expectation. Weekly at the same time is giving you retracement expectation. Is it necessarily giving us bearish expectation? It's not. It's not giving us a long-term bearish expectation. It's giving us a short-term correction. So when we expect market to do a short-term correction, you know that you don't want to be holding that trade for a very, very long time. You want to catch the trade at the top, let the market come back down. As we see, we are approaching a narrower part of this triangle. It's a symmetrical triangle. We are consolidating on the monthly within that triangle. We haven't broken through it yet. And since we have that situation here, you should be trading based on those factors. So make sure that you take in good trades and closing those trades end of this week. Don't try to hold that trade into the next week. Why do I say that? So let's take a quick snapshot view of what's coming up in the next week following to this week. So we don't have anything on the Monday, September 11th. 12th, we don't have anything either. Wednesday onwards, we have inflation rate, CPI, high impact, right? That's why this week we can expect it to probably close a doji. PPI on Thursday, retail sales, initial jobless claims, business inventories. Friday, import prices, export prices, New York State manufacturing index. So a lot of high impact news. The week following to that, nothing on September 18th, Monday again. Building permits, Tuesday, followed by FOMC economic projections on Wednesday. So the next couple of weeks post this week are very, very, and so interest rate projection, longer, current. So there's a lot of information that you're going to be seeing what their planning is and what direction they're trying to move towards. That is what you need to be understanding. So those things can just do this. Right? I've been saying this back to back, week to week. If you look at the type of movement that we generally see in this range, it's a huge movement. Very rarely we see short candles. But lately we've been staying within the same region where market has never spent this much time, which is a point of concern. We might as well be forming a monthly flag at this point. A bullish move, market going sideways a little bit, taking a little bit further dip down, which means market can still push up, right? As you can see, we don't see that happening as often. So monthly is going to be a huge factor into the coming few months. So you got to pay attention to where the monthly candles are opening up, are closing up, ranges that it's presenting. If you don't look at that, you're going to be blowing your accounts left and right. Last week, I got at least 2 messages of people blowing their funded accounts, blowing their personal accounts. So we are trading based on technical, fundamental evidences. And that is the only reason we stay profitable. We are projecting where the market is going to go. We're not taking trades based on a hypothesis that this is a good area of rejection, so now this is the exact spot that market has to reject. What does fundamental have to say? Fundamental tells you that currently it doesn't look pretty. And I've been saying this during this drop, that this drop here is going to give you a scare. And we saw that scare coming in, the rapid bullish movement coming in. Even though we started seeing that retracement, we closed a doji. We should have been able to close a red candle here. We didn't, which means we could be forming a support, just like we saw a expectation that this is a inverted hammer. 70% chance market goes bullish. Market did go bullish, closed bullish doji, continued further down. Same thing can happen here. We could still see support continuing to be formed and trying to break above. So be very cautious in taking trades. Try to secure your trades, close trades, hold what you can consider as a bonus trade. If you're trying to take a continuous swing and are expecting this retracement here, we do expect the retracement this week, okay? I am expecting that retracement, but I'm also expecting this movement here in the end of this week or the start of next week. So I'm only going to be holding specific positions that I believe will work out, will not hurt me. Even if it hits a stop loss or a trailing stop, I won't get emotionally attached to it, right? Why do I say that this move is possible? Another technical evidence is the RSI. You can see when the moving average line crosses price, market goes up to retest the level and continues down. We broke through that level. Moving average line hasn't yet crossed the 50% line either to tell us about long-term sells. You want to see that happen. So you look at this, price crossed it at a lower mark. Doesn't necessarily mean that it's going to continue further down. Moving average line had to come back up. So this is something that you can also use on RSI. Don't use RSI for overbought and oversold. I never trade that way. And I tell you guys 100 times, don't do it that way. Don't call it overbought and oversold. RSI doesn't work that way. You can see this. Market continued to make a spike, right? If you're using it that way, you're doing it wrong. 50% line. That's another thing that you should always use. 50% line tells you if market is going to come back down there and take support, which if you look at it, retracement into that spot would be perfectly taking support of a broken moving average line, retest, going bullish. Another indication market is about to go bullish. We are expecting this movement here, which is the kind of the expected range. So there's a lot of information giving us what we expect market to do. So please take appropriate trades. Okay, so from a weekly perspective, our bottom range is currently 1920, good area of support on the daily and the weekly, and a gap that we would be retracing through. If we don't see this movement here this week, then we might continue to see a doji closure or consolidation into this range, and then eventually this here, pushing up to this trend line there, and then making this drop. And then probably this, right? This is what I would expect at the moment based on fundamental expectations, okay? So trade safe through the week.